Welcome to GENCO Forex.
My main aim is to prove to you guys that the best strategies that work in Forex are the simple ones. Just follow me. Here's how to use the daily candlestick or the daily time frame as an indicator to trade Forex. Each time a daily candle closes with a tail on a previous day, you want to trade in the opposite direction the next day, especially if that tail was formed around a supply or a demand zone or a resistance or support. You want to trade in the opposite direction on the next day. Follow up with me. Go to your charts on the daily time frame and you would agree with me that tails don't lie, especially the tails that are at least 50% the length of their body size. You find out that at least 90% of those tails caused reversals on the next day or the following day of the previous candle that formed the tail. Let's look at this practical example. The previous day candle closed with a tail, and what happened next? The following day, the candle was bullish. The next day candle was bullish. It closed bullish, which means that that rejection brought about a bullish move in the following day. So, as part of this strategy, we shall be using the 10 moving average. That's the simple moving average. You'll find out here without any argument that each time we have a tail, the market moves back and reverses to mean. The simple moving average 10 will be used as a mean reversion. So market always regresses back to the mean position, which is the 10th moving average each time there is a tail regression. So whenever there is a tail in the market, you can buy or sell in the opposite direction and take your profit when we have the 10 simple moving average. As easy as that. Just look at the market. Each time there is a tail, the market always goes and touches the 10 simple moving average, which is a very wonderful strategy. By the way, this is by no means an indication, or I'm not implying that you should just sit and wait to trade only when you see a tail. This strategy is meant to boost your confidence, to boost your bias, to give you a direction, to give you a good confirmation of the direction of trade for the following day.
Here is an advice. Whenever you are trading Forex, once you enter a position, even if the market trades against you for the rest of the day, stay put. Wait for that daily candle to close. You'll be shocked that most of the time, the market will return to your favor before that daily candle closes. Same thing happens over and over again. Just be patient and combine this to your trading. These things happen over and repeat themselves over the years, over the months, over the days, over the weeks, over the hours, seconds, and minutes. You just need to integrate this as part of your trading confirmation. This tail is less than 50% of the total body size of the candlestick, so we don't trade it. So we don't trade the reversal. This is very important, very important. Take note. The body size of the candle is larger than the tail. Avoid trading tails with smaller tails than the candle. So, as a simple rule of thumb, avoid candles with short tails and long bodies. Those who say candlesticks don't work are people who sit in front of their charts on lower time frames and watch all the noise. Why torture yourself when you could just obey the higher time frame. Obey the information of the candlestick in the higher time frame. Obey the trend in the higher time frame. Obey the supply and resistance or support zones or demand zones of the higher time frame. Do not torture yourselves by watching candles ding dong, up, down, left, right, changing patterns within seconds and fractions of God knows what. Stop torturing yourselves by looking at every tick. There's a saying in Forex that if you watch every tick, you become a dick. The secret to market direction is in the higher time frame. You cannot ignore the information of the candles or the pattern in the higher time frame like a D1 or H4 and expect to be successful in the long term. The higher time frames have proven beyond reasonable doubt time and again that they lead the long-term direction. Always start by checking the weekly, the daily, and then the H4 to ascertain your direction and trade with confidence.
Just open your charts and study how price reacts to these zones. I will advise you to look at our previous tutorial about zones, how to identify demand and supply in a very simple way. Check our previous tutorial and get the details. I think I'll add the link in this video. Just look at the description, the link to our previous tutorial on zones, demand supply zones. Thank you. In the previous tutorial, we also spoke about daily reversal candlesticks and a lot interesting stuff that you want to look into it to combine it with this strategy and improve on your trading and add it to your own strategy and build your confidence. It's all about confidence. You will not make money all the time, but you will make money most of the time. The most important thing is to be strategic and profitable at the end. Be patient. As a trader, you are being rewarded for being patient. That's the only reason the market pays you. It's amazing how market never failed to move in the opposite direction where we had tails the next day. Markets always about 80 to 90% of the time follow the opposite direction of the tail the next day of the trading candle.
Thanks for watching. This is GENCO Forex. Keep practicing until you bring out the best in you. Only practice can reveal the best in you. Like and subscribe. Comment if there are questions and keep in touch.
See you in the next part of this tutorial. Bye bye.